Could it finally be worth circling back to ConforMIS, a company that uses 3D printing to do something incredibly useful, creating custom-designed joint replacement implants fitted for individual patients, along with customized medical instruments? ConforMIS came public last July at $15 a share, spiked as high as $25 in August, before the whole speculative high-growth cohort went into freefall. And this particular stock plunged as low as $7 and change, the bottom of mid-February. Since then, though, it's rebounded back to $10.61 as of yesterday, and today the darn thing broke out up 20%, part of a gigantic rally in all things medical-related. Now, I think ConforMIS is a very intriguing concept. They got a well of patents and several products on the market, including the only customized total knee replacement out there. A month ago, the company rolled out the full launch of their customized posterior stabilized knee replacement system, and the latest quarter reported mid-February was pretty darn solid, with 34% revenue growth. However, this is tiny and very speculative, okay? It's not yet profitable. And just this past Monday, ConforMIS withdrew their hip replacement submission from the FDA after hitting some roadblocks, although they plan to resubmit for FDA approval later in the year. If you want to speculate, the stock could be worth buying into weakness. Got to be very careful not to chase him. It's a big move today. So let's take a closer look with Dr. Philip Lang. He is the founder, president, and CEO of ConforMIS, to learn more about how the company's doing and where it's headed. Dr. Lang, welcome back to Mad Money. Good to see you, sir.
Thank you, Jim.
Have a seat.
Good to see you.
All right, now you've got the really the only custom-made product on the market, and the sales were good, but you did have a recall. And some of the analyst research says that there could be a lingering impact because of the recall. The last quarter didn't show it, though.
We had the recall in August of last year, and it was related to an outside vendor, didn't impact our implants, was related to the instrumentation. And we told the street at the time that we would address it within 2 months, which we did. So we were operationally fully recovered within 2 months. And where we are today is we're focusing on the opportunity in 2016. The company is growing, and we have a very large opportunity ahead of us with iTotal PS, our biggest product, our largest product by available market for years to come.
And it seemed from your quarterly conference call that you said that in the market you're starting to really pick up a lot of share, despite whatever happened to the recall. 15% market share of primary knee replacements rather quickly. So do you want to tell us what you think the doctors are seeing that make it so you're taking share so fast?
So the key driver is really the clinical outcomes paired with economic outcomes. What we're seeing in our patients is that, for example, in published studies, they walk faster than off-the-shelf patients who have an off-the-shelf implant. Patient satisfaction in published studies is 20% higher compared to an off-the-shelf implant if you get a ConforMIS implant. And that directly translates then in interest by the doctors and by the patients. And so exiting 2014, we had more than 10% market share of all primary knee replacements in 14 markets in the US. Exiting 2015, we had 22 markets where we had more than 10% share. 7 of those actually a 15% share. That's with a limited product portfolio. We only had a partial knee and a so-called cruciate retaining total knee where the posterior cruciate ligament is retained. That's a smaller opportunity, only 22%. That said, with the posterior cruciate substituting implant, that's 56% of the opportunity. That went into full launch in March. With that, basically, we tripled the available market, and we're leveraging that now into the existing opportunity.
Okay, now, Medicare Comprehensive Care for Joint Replacement. This is going to April 1st of 16, so now. You think this is going to help you? You think that Medicare is going to like the idea that the custom-made, even though it's a little more expensive than the off-the-shelf, that they're like it. Why would they like something more expensive than the off-the-shelf?
So aside from the broad commercial launch of iTotal PS, this was a landslide for us. This is fantastic. So when the program was announced, we reviewed it, and what happens under the new program is that the hospitals are now being held accountable for everything that happens in the hospital, but also everything that happens within the 90-day period after the hospital, including adverse event rates, including patients having to go to rehab centers, skilled nursing facilities, and these post-acute discharge facilities. So that said, the hospital CEO is now being held responsible for the full economic package within the 90-day period. It so happens we have, in a very large cohort, we have data that show that ConforMIS patients are doing better, and economically specifically, a ConforMIS patient is 2.5 times less likely to have an adverse event within the 90-day period. A ConforMIS patient is 5.5 times less likely having to go to a skilled nursing facility or a rehab facility after the surgery.
If that's the case, you should have a breakout quarter rather soon. Can you become profitable just because of the idea that obviously these doctors should be switching to you if they want to be able to do well in this new Medicare regime.
So the path to profitability for a med device company our stage is a longer path. There's nothing magic about that. You have a significant upfront investment. On the one side, our focus is on top-line growth, and we are growing faster than any, to the extent that I know, any publicly traded orthopedic company in the market. The other part of this equation is gross margin, and there basically we're executing on material cost reduction. You're looking at a company where today most of the implant components are still outsourced. So as we vertically integrate that, we can greatly improve our cost structure, labor cost reduction, that's software automation, and then last but not least, progressive overhead resorption as you build the volume. Nothing magic. That's a process of typically 2 or 3 or 4 years for most companies, and we're very similar in that.
All right.
regard.
Well, this is an exciting time for your company. The stock has come down a lot, but that's part of an overall group. And again, I don't want today is up very, very big because there was a huge move in the stocks, all the stocks. But this is an interesting company, and you've obviously had it come down a lot, and that makes it a little bit safer to me. That's Dr. Philippe Lang. He's the founder, president, and CEO of ConforMIS. You're going to do well under the new Medicare rules. Terrific.
We're really excited about it. Thank you. Take care.
Stay with Cramer. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.